I can code in MQL4 and MQL5, but I choose not to code up strategies for me because I use no code tools to do all the hard work, and I can generate strategies that look like this and like this. Hi friends, if we haven't met, I'm Lisa, and I've worked as a full-time professional programmer and data scientist for 19 years. Now I trade and I run my business. So these days I still write code mainly in Python and Java, and not really in MetaTrader, even though I can. So in this video, I'm going to dive into the reasons why I choose not to code and why it's not the holy grail that you think it is. So when I first started trading, I thought there were only two paths in algorithmic trading. In the one path, you could buy an expert advisor online, like the ones from the MQL5 marketplace. But there's many issues with that, like limited licensing. You don't actually know how the strategy was developed, and the logic is static. It doesn't adapt to changing market conditions. The strategy's edge starts to lose its effective over time. And most of them are high-risk grid martingale strategies that have amazingly suspicious, smooth equity curves, but eventually end up blowing up accounts. And you're always on the hamster wheel of chasing the next expert advisor, never really building up a true diversified portfolio. So I decided a while ago that that path was not for me. The other path that I've been dabbling with is coding, but coding takes a long time. And first you need to think up a strategy and then code it up and then test it on a particular currency pair and a particular time frame. A lot of the times the strategy will just fail. What then? So the next step after coding is optimization, and this is where you find the best settings that worked on historical data. For example, if you were designing a simple moving average cross strategy, you built it using 30 and 100 simple moving average, but through the process of optimization, where MetaTrader will do all the hard work for you, it will find after hundreds and thousands of runs that the best number is 27 and 104. Okay, these numbers are a little bit random, but that's what, according to the optimization, works best historically. So what do? We take those settings for that strategy, we put it on a demo account or a real live trading account, and then we leave it for a month or so. And what does the equity curve look like? It looks like this. Not so good. So now that we've learned about the consequences of over-optimization, how do we prevent it? With robustness testing. Robustness testing, what is that? So these are a series of further tests you can do on a strategy to reduce the likelihood of over-optimization. How many more tests can there be? Surely at this point, you think you've done most of the work already because you've spent weeks, months developing this strategy. Surely you've gotten over the hardest hurdle there is. By the way, if you're a trader, you might want to check out trading.com, who are kindly the sponsors of this video. So they are not a prop firm, but a way to get hedge fund capital and get paid along the way. If you're familiar with the prop firm industry, usually they have a million rules designed to make you fail. But since trading.com is not a prop firm, they don't have silly rules like trailing drawdowns, daily drawdowns, time limits, rules on your trading style. They just have two rules. Don't hit the max loss of 10%, and you get moved up to the next stage when you hit 20% profit target. Then there's 3 account types you can choose from. Let's pretend you go with the 1000 option. There's 5 stages. You start at stage 1, and when you make 20%, you receive $1,600 in payouts and move up to the next stage, stage 2. And every time you make it to the next stage, you get more money and more payouts. And the last payout is $20K, where you're eligible for hedge fund capital. So if you're interested to start your journey to managing real money in a real trading account and get paid for it, then the link to sign up to trading.com is below. There's a great Simpsons episode where Homer climbs a mountain and he puts so much effort into it. He's struggling as he's climbing the mountain. And when he finally gets to the top, he thinks he's made it. But then the clouds separate, revealing another mountain that's even bigger than the one he's climbing. And that's what coding and robustness testing is. Coding is this tiny little mountain that you can only see when you first start off. Only after you've completed the coding mountain, then you realize there's an even bigger, huge mountain ahead, and that's robustness testing. And boy, robustness testing is not a joke in terms of effort. I'm going to pick one at random. Let's choose Monte Carlo parameter randomization. So with this technique, you take your simple moving average with 30 and 100 and you backtest it and you get this equity curve. Okay. So now you'd have to change the settings a little bit. Let's go with 29 and 100 this time, and where we repeat the backtest again to get a slightly different equity curve like this. Okay, this one looks a little bit different. Now you need to continue testing and doing this a few hundred times. So now we've got 500 equity curves. Okay, so how does this help us out? It doesn't. Not individually. You need to take all these different equity curves and overlay them together so they're all on the same chart. Now we're talking. Now we have 500 different equity curves, which gives us a much better understanding of the different values and what the equity curve might look like. And some tests are going to look pretty good, like this one, but some tests are going to look pretty horrible, like this one. At this point, how much time and effort have you put into this one strategy? Weeks? Months? Years? And that's just with one Monte Carlo test. There's still a whole bunch more like walk-forward optimization, slippage, multi-time frame, multi-market, blah, blah, blah. At any time during the testing process, this strategy can fail. It can be the very, very last test after spending hundreds and hundreds of hours on a single strategy. And if you've ever used the MetaTrader backtester, you'll know how slow it can be to test tick by tick data and repeat it 500 times. There's a saying that goes along the lines of fail fast, fail often. That's what basically you want to do with strategy development. You want to be able to test ideas quickly and move on. You don't want to spend months and months testing the one idea. You realize it doesn't work and then you throw it out, or even worse, because you've put so much effort into it. You make a small tweak here and there to force it to work. And then before you realize, you've fallen back into the trap of over-optimization, which is the very first mistake in the strategy development journey. Now, I'm not saying don't learn to code. Coding is such a useful skill to have. I still code today in Python, in Java, and I do use my MetaTrader coding skills to write little scripts to automate the launching of 60 plus strategies into a brand new account. I write expert advisors to track the drawdown tick by tick and heaps of tiny little jobs to make my life a little easier. But what I don't do is spend months and months testing one strategy. I research ideas for a strategy, I build it, I perform a whole bunch of different robustness tests on it and then throw it out after 1 or 2 days and move on to the next strategy idea. I use a tool called Strategy Quant, and if you want to learn about how this tool works without needing to write any code and how it can perform a whole bunch of robustness tests for you in a matter of hours, then I think you should watch this video right here. Thanks. Bye.